And also, it's a great observation given by Mr. Chowdhury as we discussed that I'm going to deal with the regulatory and business framework relating with the COVID-19. So I'll be into bit depth with the monetary and the fiscal policy because the situation arises. This is something not example before. This is the first time in the history that any government is facing. If you take an example, other pandemic came before, but the like a second century, the Anthony plague, or the 6th century, the Justinian plague, or the Black Death in 14th century, or the Spanish flu. But none of the pandemic affected like this time, because this is actually collapsing the whole world. And the way responding the government, it must have to be very aggressive move, because it requires aggressive moves. And that is the reason each and every government has taken a step in terms of the monetary and the fiscal policy. And in Bangladesh, especially, the government has, like the Bangladesh Bank, the central bank, has taken the monetary policy by using all the power the Bangladesh Bank was given by the Bank Company Act 1991 under the Section 5, Section 13, 45, 49, and 45. All the powers given, use that, as well as the Financial Institution Act 1993, Section 18. By using that, first, what Bangladesh Bank wanted to ensure that liquidity in the banking sector. And that's why adjusting the adequacy capital ratio, like CRR, repo, and the ADR, and the SLR. And by adjusting this, what banking channel has around 45,000 crore taka at the moment in the banking channel by that adjustment of the ratios. But what happened in the another initiative taken by the Bangladesh Bank is straightway that loan classification, it will be suspended from January to June. Nobody will be classified as a defaulter, and then it extended to the up to September. Another initiative taken to have the liquidity in the banking sector, that all the banks, the December closing, so it's generally will pay off the dividend. So what Bangladesh Bank given, okay, you can have the dividend if the banking institution, you have like at least 12% adequacy ratio, then you can pay highest 30%, 15% cash, and the 15% your stock. And 15% cash, what you are going to pay off, it will be in September, but is still trying to relax that. So at least the banking channel will have the liquidity. But by doing that different stages, there are 17 banks considering with that regulatory framework that they will not be able to provide the cash dividend. And then April and May interest being suspended by the central bank, and is subsidized by the government, because the total interest comes around 16,500 crore taka, but that's subsidized by the Bangladesh Bank. It's a government given 2,000 crore taka. And then for the SME, it has a huge, large scale. For SME given 3,000 crore taka, because the SME lending rate is around 24%. So what Bangladesh Bank did, okay, 1% is the charge they're charging, and giving the commercial banks, the commercial bank is going to do service charge 2%, and then it will be given to them, the NGOs, 3%, and they can pay around lending around the 9%, that is the highest cap. As well as for the farmers, it has given like 50 billion or 5,000 crore taka, and that is at the rate of the interest rate 4%. So reduce it. Now what happened in Bangladesh, the banking sector, the infrastructure is worse before COVID-19, because we have a huge NPL and write-off. Around is the government official record is like around 11% above. Like if it's our lending is 9,76,000 crore taka, out of this is Government saying that is 11% above, but the IMF is saying that around 24%. It means 2,40,000 around the NPL and the write-off. But what it's happened here that there are certain rules it had in a banking sector or the Bank Companies Act, which is actually changed to accommodate some of the business people. Like from a family, it was before 2 people can be a director. Now it's the 4 people, and the around from 1 person can be 2 terms as a director of the bank, but it's now it's the 3 term. It's meant the 9 years. So the changes of the Bank Companies Act 1915 COCO and the 1510, and also there are other changes done, but especially the bank directors, they actually taken loan around 1,73,000 crore taka from the banking channel. So the board and the management, there is no actually separation. Is the management generally gets the dictation from the board. Now, what's come up with the one of the unit financial institution division in February, given some amendments around 50 clauses of the Bank Companies Act to the Bangladesh Bank, and Bangladesh Bank more or less agreed with the 90% of it. If it's, then the banking channel can be again in reshape, what's generally we are expecting. Then if you come to the capital market, what it happened during the, because the capital market last 2 years is suffering worsely. Just give you an example of the overview. In 2010, our market cap was 3,50,000 crore taka, which is 50% of the GDP. And the index was DSE around 8,000. But if it's in 2020, if you consider now, it's like a 3,10,000 crore taka, and the investment market cap to GDP is like below 12%, and the index is less than 4,000. So that's the reason Bangladesh Bank actually directed to other banks, you must have to invest at least 200 crore taka in the capital market to provide the liquidity support. And for that, the banking actually, they had a requirement from the Bank Companies Act 1991, the section under section 26. Like before it was that for your, what is the liability of liabilities 10% you will have to invest in the capital market, but now is the your paid up capital and the reserve of, it's a 25% you can invest in the capital market. But the institution, they're only investing on an average like 13 to 14% of their capital. So that's the reason the February 10th, Bangladesh Bank directed to the all banks that invest the 200 crore taka each. And then on 19th March, as due to the COVID-19, the price was falling directly. Bangladesh Bank came up, the Bangladesh Security Exchange Commission came up with a thought that it's going to introduce a fixing a floor price, and which is like a previous 5 days average. So the stock price will not go down or will not become the cheaper. So you can trade on the floor price, but the thing is that it's not going down, it's not going, it may go up, but not down, to save the small investors and the people those are doing the business by margin, to save them. And then what happened in 26 March, we have a holiday because of the COVID-19, and 26 to May 30, the market was closed. But in the world, anywhere in the world, nowhere the market was closed but Bangladesh, because we don't have the automation. Due it was 1998 to today is the 2020, 22 years passed, DSE or the CSE failed to do the automizations. And another reason, the commissions, there are 5 members, 3 were tenure expired, so they had to leave, and quorum was not fulfilled because quorum is 3, so they couldn't take the to resume the market. But if you see the chart, there is a practicality. It's a Pakistan, Jakarta, and the Vietnam and Bangladesh. You can see around somewhere 3,600 for mid of March, the market was closed, and that's why it didn't go any trade. But all over the country, world, everywhere the trade was continuous. But hopefully this new commission, they have taken as a challenge, and they will introduce the automation. Hopefully in future will not take this place again. In a fiscal policy, in relating to capital market, government has given some taken some initiatives. Like, in budget there are two parts. One is the literature, other part is the actual accountancy. So in literature part, what government promoted is saying that participation of banks and non-banks will enhance, and the credit facility of merchant bankers and institutional investors will enhance, and the capacity of state-owned ICB will enhance, and also the confidence in the market will take more steps, and also increase the institutional investment, and as well as the more IPOs or the good quality of shares will come in the market. But the accounting part, what I see, that in a bond, they reduce the source tax on the transaction and the interest, as well as the dividend income. It was free up to 25,000 taka. Now they made it 50,000 taka. And the double taxation for the listed company, they remove it, as well as there is a law in 2019, we call it Ortho Ain. And there was a 16F and 16G they introduced, that after the profit or the net income, you have the whatever the amount, you can take up to the retained earnings 70%, and after that the 30% you will have to pay off as dividend, and that 30% you can do 50% cash dividend, 50% stock dividend. And that is, if you do more stock dividend and less cash dividend, then on the stock dividend whatever you paid, you will have to pay tax 10%. And that was actually ensured. And another thing about the undisclosed money in the market, they inspired that you can invest in the capital market, but with a lock-in 3 years. You cannot withdraw your money for 3 years. But that's not actually in other industries or even money market. It was not given that way, but the condition imposed only for the capital market, which is not inspiring for the capital market investment. But if you see, just give you a bit gist of the price earning ratio compared to other countries. Like in Bangladesh is the P of the market, it's like it was in 14.25, whereas in India it was 28, and dividend yield it was 4.24. But in Bangladesh is the P at the moment, it's 10.5, money below 11%. So this is a very good market to invest for the investors if anyone is inspired to invest in that market. But that was the monetary policy relating with the money market and the capital market. The overall, the fiscal policy, I'll just touch a little bit, not much, I'll not highlight that. It's just a given cash incentives for the 5 million families, each 2,500, and export-oriented industries given 50 billion for the salary stimulus package, cash aid, food, and 100 billion for the emergency crisis. Especially corporate tax is reduced. It was like a 35% before. Now it's a 32.5. 2.5 is reduced for the unlisted company, not the listed company, because listed company is 25%. And for the individual tax, the slab was 250,000. Now is the 300,000. It's a free, you exempt from tax. But above that, it was before 10%. Now it's a 5%. And the highest was the slab 30%. Now is the 25%. So that was the fiscal policy overall. But if you see how the government is going to get all this money, as Mr. Chaudhary also mentioned that the fiscal stimulus package, there is around 1,03,000 crore taka, and it's a 19th stimulus package, which is a 3.7% of the GDP. It's the all economists it's myself, I think, what the way government could do. Firstly, there are more like unnecessary expenditure, and the ADP budget cut could done, where it's a 2,05,000 crore taka at the moment for this budget. I think that could be reduced, because there are some running work in the running project, which is 10% or 20% or 30% completed, which is not going to do more employment or not connected with the health or the COVID-19. So we could postpone for a year and could continue afterwards. That fund we can inject in the money market or the capital market. And the second one we can get is from the World Bank or IMF or the ADB, because we have an excellent record for the borrowing, because we have external debt around 15%, and the public debt ratio is 35% to GDP, and also annual debt servicing only just 10% of our reserve. So it's a very good position, and we never missed our payment like Argentina or other country. So still, World Bank giving us $300 million. At the same time, IMF is saying $732 million. So the foreign from the budget we are seeking is 76,004 crore taka, but I think if we want, we can have more. But thirdly is from the banking channel borrowing. Last year we had a target 47,000 crore taka, but we ended up with 82,000 crore taka from the banking channel. This year the budget targeted about 84,000 crore taka, with what I think it shouldn't be from the banking channel, because banking channel already under pressure. And that's why we have an option, like there is a national checker bill introduced this year 2020, whereas all the government corporations fund taken into the government banks account, it's a 210,000 crore taka. So I think that fund can be injected through the banking channel and the what is called our capital market.
Wrap up in a minute or two, please.
Okay. So lastly is the printing money, what is Bangladesh Bank. Give me 5 minutes, I can wrap up quickly. As the printing money from the Bangladesh Bank, and that is what I don't think it should be, but Bangladesh Bank is saying that, okay, stimulus package 50% will provide and 50% the banking channel will provide. Lastly, whether the Bangladesh government is obliged to do it, yes, in our constitution, in preamble straight said, this is fundamental human rights for all the citizens about the economic and social the security. And also Article 10, Article 15, where it's saying specifically is the state responsibility to ensure the social security as well the basic fundamental rights. And whether the stimulus package government can introduce within, because the parliament was not in session, in our country we had a Communicable Disease Act and the Disaster Management Act 2012. Under this, government can, and because of after the parliamentary session as the finance bill, then it will enact, and afterwards it's a finance act. So government has the empowerment to do it. In short, the budget, it's like 5,68,000 crore taka, which is in $67 billion, 18% of the GDP. And if you see the generally 3,30,000 crore taka we are getting from the revenue, and the NBR will arrange, and the deficit around here, the bank borrowing and the foreign source and the saving certificate and from the leasing company as well. And then you see the sources we are going to spend, or the allocation is the education around 14.6%, and the what is called the health, you see around 4.9%. So in general, in education compared to the GDP, we have ratio wise it's at 2%, and compared to the health ratio wise to GDP, it's a 1%. It's a very minimal investment. I think government should increase on that, and hopefully in future government will do it. As the GDP, Bangladesh government is saying that this year will be 5.2 and next year it will be 8.2, their target. But the World Bank is saying this year will be 1.6 and next year 1.1, whereas the India will be -3. But the IMF and the ADB, they're saying more, around 2% to 3%. So still we will be in positive remarks. But if it's given by the Bangladesh Bank one specific configuration relating to GDP, like 8.15 last year, this year 3.8, next year 5.7. Export, it was 10% growth, but this year we are reducing because our export until May, it was like a 30 billion, compared to last year it was 37 billion of this. And the import we had also reduced because it's a 42 billion this year up to this time, and then the last year it was 47 billion. But the main problem is because we don't have much import. Import is the raw materials which will create your employment, at the same time consumption, and as well export, because we do the finished goods and export it. And current account balance, we are always having the minus because we have the huge trade deficit around $14 billion, and that is the reason we are having the current account balance minus. The private credit sector growth, that is the most important part, because in Bangladesh, it was like a 5 years before around 18-19% our private credit growth. But this year came to 8%, whereas our private investment, it was like last year even 23%. This year became around 12%. So we need to, because government need to ensure that the private investment goes more. The last part is like we have the highest remittance this year because of the 2% intense incentive given by the government is the 17 billion, and we have 12 million people across the world. And also the the foreign reserve, because of the less import and the less export, we have 34 billion foreign reserve, which is also more than previous year. Just last bit is the according to BTRC, we have internet user around 100 million out of 170 million. Think about how boosting it is. And then Oxford Internet Institute, out of their research, they found out like 650,000 registered freelancer we have. Out of that, active is the 500,000. Those are the active freelancer, mean the online labor, and they're earning $1 billion. And outsourcing labor out of 100, 24% doing the India. And next is the Bangladesh doing the 16%, even above China, even above USA. And above all, we all are young, you see, and 65% is still young. We have much more to do with. And for my presentation, make it quicker and easier. Some terms I use like crore is a 10 million equal to 1 crore, and 100,000 equal to 1 lakh. Because of the local participants, I thought it's easier to make them understand. And thank you very much. And it's because I've taken bit time. It's too much to cover. So fast had to do it.
And thank you, Masum. I'm